Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay, let's take a look what's going on in the gold market. Not much changes we have since the weekend. So yesterday's was really anemic price action. Here is very small candle. In general, in a few recent sessions, you could see the overall price action, well, slowed down. So it really stands in a tight range, and actually both trade sessions stands inside of the Friday action. On the Friday itself, you could see it was kind of the indecision type of action, because gold market, although initially has shown some minor reaction on the non-farm payrolls release, is closed in the middle of the range, and it indicates some kind of the doji and indecision situation. Overall standing here, well, we already talked about it on the weekend, that after the sell-off here is flat action mostly stands in favor of the further downward continuation rather than a reversal, because if you remember on Friday, I have shown you in the weekend the chart that market actually has hit here the COP target is 618 support redrive. Buy pattern has been formed, and if market indeed was bullish and is bullish, that should be enough to start at least some upward action, some drifting to the upside. But if market reaching of all these targets and completion of these patterns was just limited by the minimal target of these patterns and hasn't used these patterns to start the reversal, it means that market mostly bearish. And from that standpoint, it seems that indeed we could get here some downward continuation, but that is just a suggestion. So based on the price action that we see currently, I recall what was our trading plan. We said that market should stay below some important resistance levels, which one we will show you in this video later. So in intraday charts, if these levels will be broken, that could put the background for a possible further upward action, and we could see the action above this area. So it means that another new top could be formed before some significant retracement will start. So what particular levels we are keeping an eye on? First of all, on the 4-hour time frame chart, we have to deal with the triangle pattern. That's the COP that has been hit on Friday. And since then, market still stands around it. You can see it looks a bit heavy because it can't get started the upward action. So if I would suggest that market stands in some retracement, it's complete this ABCD COP target, theoretically the bullish market should reverse up and just continue with this triangle breakout to the upside. But this hasn't happened. So it means that market is waiting for something. Bears probably have some pressure here because you can see this market gradually is turning down, and in general, this here, the price action makes me think that we have the bearish dynamic pressure, because take a look, trend stands bullish, market stands after this hitting of significant support area, but no significant bounce has happened. It's even trend price tending is lower. Well, in such circumstances, I would suggest, well, or let's say it is a better way, that we do not exclude the chance that we get here some acceleration. Because here actually we already have shown you that here we have kind of the, well, some kind of the flag type of action to the downside, something of that sort. So I will bring it out, you could see it better, right? So drop, sideways consolidation, usually this type of action leads to downward continuation. So that's what really could happen. Still, on the hourly chart, market is trying to hold some shape of the reversal price behavior. So recall what we said, well, maybe if upward action will happen, in this case we could accept, and we will consider minor ABCD targets, OP around 1945, 1948, we call it as 1950. Confluence resistance, and that should be enough for the bearish market to complete. Ultimately, we could accept the retesting of the neckline of this head and shoulders pattern here. So here we have the XOP target 1963. That's ultimately will happen. If market will break it up and start tending back to the top of the head, so if it will return back in the range of the head and shoulders here, that will be bullish, and it will mean that we're going to the new top because in this case this triangle will be broken up, and that will start to work as failure downside breakout of the triangle. This will be a bearish trap by the Czech-Schwager terms, false breakout of the triangle. So that's what we could get potentially if market will tending high and break on these levels. But currently, I do not see any signs of that. So overall price action here is very gradual, slow. We see some pressure to the downside because market just creeping with this trend line, has no ability to break it. Also recall that once the COP has been hit, market has been formed the free drive pattern. But what has happened on this free drive, as we discussed here, if you remember, it was able to complete just minor target, slightly spike above this area. That was the minimal target with the free drive, and then it's collapsed. So it's it's not the price action that you expect from the bullish market. From that standpoint, I don't want to buy in the current circumstances. Theoretically, you could try, but I am really not fascinated with that. And better to consider, as we said in the daily chart, for those who trade on the daily, it would be better to wait for some strong support there where we could consider taking the long position. Hopefully, that will be around 18 even. 80 even we also have here XOP target of the same ABCD pattern, so it'll be around 80 even area. Here the strong support stands that we already talked about it, so it'll be great opportunity to go long with the gold. In the current circumstances, I do not see really good bullish setup here. So that's been said, for the bulls, you will have to wait either the drop back to the 18 even, or we need to get clear signs of the breakout here back to the head and shoulders range. That gives us the confirmation that gold really is going higher. For the bears, this point, we do not have clear continuation patterns. You could, for example, wait for some completion of this ABCD. This will be some kind of ABCD retracement, cut this triple to sell. This will be at least good resistance where you could try to go short. That will let you to protect your stops to position with the break-even stops. If you even will be wrong later, probably some reaction will happen here out from this level where you could move stops to the break-even. So maybe you could act in this manner. Or if you will see that market's really dropping here, challenging with this A point, that also could be the sign that market's going lower. So that's what we have right now in the gold market.